Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Tuesday, September 28th, 2010. The market continued its pullback, which started yesterday. We got some news overnight that, the wheat market in Europe was actually trading much lower, and that carried on over into the U.S. markets here this morning, pulling the grain markets back before the electronics closed up overnight, and continuing again on into open outcry after 9:30 Central Time today. So wheat led the way here today to the downside. The beans struggled with staying positive throughout the early session trade of the day, and ended up finishing much lower as well. And the corn, of course, followed behind both of them. So here's where it all finished up at. These corn settled at $5 even today. That's down 12 3/4 on the day. We did have a low of $4.99.5, so they were able to get through $5. There was a lot of buying interest between $5.01 and $5, and in the last 10 minutes of trade, we saw a corn tick from $5.02 1/4 to $5.01 1/4 in a matter of what seemed like one trade. Somebody big was selling the board at the market price, and then we saw that again to get down to $5 from about $5.01. We went down to $5 right away, in what seemed again to be one tick or one trade. We moved a penny. So there was some significant selling into the closing minutes of the day. That's where we made our lows on the corn as well as soybeans and wheat. So corn again settling at $5 even. Beans settled at 11.10. That was down 18.5 on the day. That's November soybeans. And then December Chicago wheat down 21 3/4 today at 684 3/4. Now you can call this long liquidation ahead of this report. You can call it new interest selling into this market off of some technical objectives being reached, specifically in the corn market. We had a double top formed on Friday. Not exactly the type of double top I would sell into off of the volatility and the significant move higher that we saw on Friday. However, so far that has held, and they've been pulling the market back since Sunday night. So we'll see what the rest of this week brings us. Today was a bearish close for grains across the board. All this was going on while the dollar was down yet again today, and crude oil down. So really no direction from the outside markets. If anything, the weaker dollar trading right now at 79.25, down 30.5 on the day, should be supportive for the grain markets. Of course, now we're hearing that other countries who typically would buy grain from us or have looked at buying grain from us are saying that the U.S. markets are too expensive, not only on the board price, but when you factor in shipping as well, they can go elsewhere and get the grain at an overall discount to what the U.S. is offering it at. So that's something that's going to weigh on these grain markets, at least in the nearby future as well. Are we in fact going to lose some sales to other countries because of the surge in prices over here in the U.S.? Crude oil right now down 44 cents, 76.09 is where the crude is at. Now, how do the grain markets affect the cattle and hog markets today? Well, the feeders actually had a pretty good day. You see corn pull back this way, the way that we saw today. There was some interest coming into buying feeders on the board. We were finished up $1 in the October contract at 110.40. That's where they settled up. Fat cattle were down only 10 cents in the nearby contract. 97.15 is where October fats finished. Did get some word out of western Kansas today that there were bids being removed in the feeder market, cash market today, because of the anticipation and the news that's out there circulating around the country right now that corn's going to $6. So some cattle feeders are getting nervous about having to incur that cost. And again, this morning I had a client tell me that they were canceling bids out there and walking away from cash trade in the cattle market. So that's something else that these grain traders are going to have to consider. If they're going to run corn up really high, they're going to affect multiple industries, starting with the cattle market. The hogs today, we were down 57.5. We had a decent break in the hog market today. 57.5 is where they finished up. Right now we're gearing up for the seasonal break. If we start to see the kills get up around that 420 number, that's going to be an indicator that the seasonal market price break is underway, and we should prepare ourselves for additional downside movement in the hog markets. Something else that came up of interest here after the close, one of the brokers came out and said, "Hey guys, I found a hedge idea for diesel 11 corn that I'd like to share with you." That's something that we're looking into right now, but your fair warning is that if these markets do break and these prices do go away, they can go away even faster than they were given to us. So please pay attention to what the board is doing. Please get your capital in line and find out what your risk tolerance is, and call in and get some of this grain for next year protected. Diesel 11 corn, Diesel 11 beans, July wheat. We have all sorts of different opportunities out there right now at significant levels. We traded near $5 in Diesel 11 corn yesterday, up at $4.95, I believe was the high. We've had November 11 soybeans near $11. So we have opportunities to get prices locked up for you. Call us at 800-262-7538. We'll be more than happy to go through with you some of the opportunities that we're finding and use some of the strategies to protect your grain. You can also visit us on the website where we post our hedge advice. If you are a subscriber, the website's www.allendale-inc.com. Again, my name is Bob Dalton. Good luck trading this week, and we'll talk to you again really soon.